Oh, good morning, everyone. I hope you're all well. It's Susie from Esoteric Trading Solutions again. Please be kind to each other. Please be kind to your family, friends, just people in general, and your animals. It really always distresses me when I get negative criticism which is not constructive, particularly on YouTube. Why? The question I've got is why are people so cruel and just not very nice at all. I repeat, I don't get paid anything to do these. I do this out of my time so that I can help people like you, to learn, and I don't get paid ICO money or anything like that. I haven't received one donation or anything like that, and I do it just simply because I want to help you guys. And I don't mind if it's constructive criticism, but when it's just outright negative, like a few people have commented on my YouTube, it just really annoys me. And I just wonder why people are so critical. This world is hard enough as it is. I don't know what it's like in America and everywhere else, but certainly in Australia it's very difficult for people to live. There's a lot of poverty. People, can barely afford to live. There's a lot of people in the street. There's a lot of people that suffer with depression. Suicide is like 2,500 people a year. And I just think, honestly, we have to all be kinder to each other. And I live that way, and that's how I do it. I don't expect anything for what I do here. I just try to help people. And I just want all you guys out there to become better people, because seriously, some of the comments I get on YouTube, which are not constructive, I would really honestly like to get rid of those people as my subscribers, because I'm just not interested in negative people that try and pull people down. And they know who they are on my subscriber sheet, and I've actually answered them. So, really honestly, this world is tough as it is. It's got to become a better place, and you and me can make it a better place. Anyway, look, I just want to go and talk about some of the questions that people had on my last YouTube, and again, you've got the obligatory disclaimer, but these are some of the questions that people mainly ask me. Excuse me. I think people are getting confused between a public offering, which is a first-time issue, a secondary market, which is what we see the crypto market as being, a secondary market. People are asking me about valuations of cryptocurrencies. Ripple's value. Why doesn't Ripple go up? The cryptocurrency Ripple, so many clients and revenue. Securities, is it going to be negative or a positive? Legislation, asset classes, people are getting mixed up. They're getting mixed up about asset classes. They don't seem to understand global fund managers and the machinations of how they work as global fund managers and what it means for the crypto market. And there is, excuse me, a big distinction between the retail element, which is the small investor, trader, trading the crypto market, and the huge wholesale element. There is a middle market as well. So basically you've got a retail element, a middle market, and a wholesale market. The retail element is generally under 100,000. The middle market can be 250,000 to $1 million, and the wholesale market, it can be anything from, basically a standard wholesale size of deal is 5 million up. In between 1 to 5 million, it's a bit grey to whether it's middle market or whether it's wholesale, depending on the institution or the corporate or whatever it might be. So the first thing I want to say is legislation that the SEC, the Security Exchange Commission, is trying to put in place is legislation for initial public offering or initial coin offering, which has got nothing to do with the secondary market when you buy and sell Ripple or when you buy and sell any other cryptocurrency. So what they're getting at is when there is an initial coin offering, the paperwork has to be done as detailed as any other market, and the cryptocurrency market should be no different. So we talk about the bond market, we talk about the equity market, the cryptocurrency market should be no different in terms of the paperwork, in terms of what's required for a full prospective prospectus of detailed information, so the investor that invests in the initial public offering has all that information and knows that it's generally valid at the time, because the prospectus has been audited by auditors who are on the line, and the directors or the founders of the coin are on the line for that coin. So in other words, if they tell you the wrong thing and make statements that are outlandish, that aren't true, i.e., for example, we can, transact 10 million, 10 million transactions a second, which is technically impossible, then they are up for fraud. And people, they don't want people, the SEC doesn't want people investing in something where there's been fraudulent statements made. Also, where does the money go? So the SEC is trying to protect the investor. That's the first thing. And without regulation, you as the initial investor in a public offering have no protection. And that's not a great thing for anyone, because it means people can come to this market, and we've seen it. 6 billion has already been done in this market this year, and it's not surprising 6 billion is being done, because they're all trying to do ICOs before the legislation comes in, which means they're not they're not subscribing to any sort of regulation, which means they can tell you anything they like in their paperwork, because, again, they may not be on the hook for it. Mind you, the SEC is coming down hard on ICOs and anything that looks like an absolute outright fraud. They are calling the founders or the initiators to account. Now, that should be the case in the cryptocurrency market no matter what, because, as I said before, 46% of ICOs last year were scams, or there was something wrong with them. 46%. So it's 1 in 2. So if you don't get bitten, 1 in 2, you're pretty lucky. So the first thing is the initial coin offering needs proper documentation and paperwork, like any other market, whether it be initial public offering for the equity market, whether it be a bond offering in the bond market. The bond market needs a proper term sheet, which is basically, a term of reference to the bond itself, and a proper prospectus if it goes to the retail element under 250,000 or 100,000. Again, if it's private equity, a proper prospectus needs to be done. If it's property, a prospectus needs to be done for initial property sell. It's just the way it is, and it's the way it should be. And we'll get to the situation whether, things are, securities or not. It's not bad for the market, and I don't know why all the retail element in the crypto market is saying it's bad, because it's just stupid. The second thing is, once an ICO has come on the market, it trades in the secondary market, which means it just trades on the exchanges. You can buy and sell on the exchange, and, for you to open up an account, you open it up with the exchange, but you don't have to do any paperwork because you're buying and selling the cryptocurrency. That's called the market, okay? That, once you're trading the secondary market, you don't have, public offering paperwork if you don't want to. That's up to you. That's number 2. The third thing I want to address is the value of cryptocurrencies. There are a lot of people out there that say you should value cryptocurrencies like this and like that, or it's wrong to use a discounted cash formula because they're not real businesses, because they're not this or they're not that. Now, I disagree with all that. The cryptocurrency itself, or the business, and whether it's a voluntary business or not, the technology, the developers are voluntary. It is a business. The business needs to make money, because even if there's volunteers working on the technology and there's no money coming into the tin and no one's using that cryptocurrency, there's no usability, eventually that business will go broke. The volunteers will only work on the development or the technical development of a coin's technology for so long. Because, if they're not getting paid for the future with cryptocurrency that's valuable, they will not work on a cryptocurrency. So the valuation of cryptocurrencies should be like any other market, where you value, you make a valuation on a share, where you make a valuation on a bond, where you make a valuation on a startup company, where you make a valuation on a property. And my belief is the correct valuation for a cryptocurrency is the discounted cash flow model, where you're projecting the revenues of the business going forward, plus the revenues of the existing business, plus obviously the circulation of the coin, plus the future prospects, plus, expenses, whatever. And that is being projected out, for the next 10 years or so, and you're bringing it back to a present value cash flow. And then you look at that present value cash flow against the outstanding coins, and the total coins and the burn off rate. Now that is a proper valuation over, obviously, interest rate differentials out on the curve, as well as, the cost of credit and everything else. A lot goes into a valuation model. Now, anyone that's giving you a valuation on Ripple or any other cryptocurrency without a proper valuation, it's crap. It's pie in the sky stuff. It doesn't mean anything. They're just putting their finger up in the air and they're going $100. How do they justify that valuation, and where do they get that valuation from? It doesn't mean anything because there's no substance behind it. No substance whatsoever. Now, in the crypto market at the moment, as you're all aware, we see cryptocurrencies, Neo, EOS will trade at $18. Neo will trade at whatever it's trading at the moment. They all trade at different levels. The valuation of the market, where the market sees these cryptocurrencies at the moment, the price of those cryptocurrencies, that price is not necessarily right. And that's why markets are not always right. And that's why markets produce opportunity to buy or sell. Now, the thing is, in the cryptocurrency market, there are so many retail people that have no experience. They trade the market. They've never been trading professional markets, doing professional valuations, looking at the business of the cryptocurrency and the background of the cryptocurrency and the networks and the probability of getting people to use the cryptocurrency or the platform. And so thus we see crazy valuations in this market, which are not produced on any substantial information. Also, when we talk about Ripple, the technology and the crypto, there are so many people out there that have no idea or understanding about the technology of Ripple. Someone came back to me yesterday in an email to me and said there's some guy calling Ripple a scam. I mean, the guy is an absolute idiot, because the Bank of England is very close to putting on Ripple. I'm absolutely certain of it. They've been testing Ripple for a number of years. The central banks are looking at putting on Ripple. I know enough about Ripple. I've seen their technology. I've gone into their office here in Melbourne. I've seen it. I know how it works. I know how the SWIFT system works intimately, and I know what Ripple can do, and I use their wallet and I transfer cryptocurrency all the time. Clearly, this fellow that's saying Ripple is a scam has not used Ripple to pay anything, and they haven't seen how the technology of Ripple works. So I would ignore all that bad information out there because it's not true. Excuse me, I'm thirsty. People that say Ripple is a scam have no idea about the technology, and they clearly don't use it. And also, they're basically saying that every bank, every professional institution that manages risk, that manages money, that prices up risk and gives valuation to things has no idea. Well, I've got news for them. They have no idea. And people that watch YouTubes are pretty stupid to watch people like that, I have to say. I don't watch other people's YouTubes. I know some of you came back to me and said, such and such is putting a price of Ripple at this or something, or someone said this. I don't care. I don't know what other YouTubers do, and I'm not particularly interested. I don't watch any other YouTube. I don't know who is. I didn't even know who Hoda was that, that obviously, put me in some newsletter or something. I don't watch other YouTubers and I don't read other people's stuff. I do my own research and that's it. I don't want to be tainted by some of the stupid ideas out there in the cryptocurrency market. So with Ripple's valuation, I would not give you a valuation on Ripple until I did a proper valuation model on Ripple, which would incorporate, obviously, current clients. What is the profitability to the business with those current clients? When Ripple, has $25 billion in the bank with no debt, assets, because it's no different if Ripple was going to go on the stock exchange as an initial public offering. They would price their stock, almost like a Google, because the prospects they have and the real business they have are so valuable. Ripple, the company, has $25 billion and more and getting more clients every day, and they can basically buy small startups, which they do, to basically get these small startups to invest in the cryptocurrency of XRP. And also they have a pipeline of new clients which are going to add to the bottom line every day. Now, the cryptocurrency market here as it exists, and you've asked the right question, why doesn't Ripple go up? Because they have heaps of clients and revenue. It is a fact of the cryptocurrency market today, number one, being unregulated, and the professional people are not in it. Number two, the retail element is stupid, absolutely stupid. Number three, you either love Ripple or you hate it, and the ones that hate it have no idea about the technology and have no idea about the value of Ripple. Number four, you get people in the retail market, pumping it down and putting it down, basically. And that is because, as I said before, there is no legislation in this cryptocurrency market. Now, the big fund managers that manage trillions of dollars will not come into this market unless there is regulation. Regulation has to be, as I said before, the initial coin offering has to provide the correct information that is set down by the Security Exchange Commission. No different to initial public offering with shares, bonds, whatever, prospectus with bonds, or a term of reference, or a detailed information about the bond offering or the property offering. Go get yourself a public a prospectus for shares. Go get one and you'll know what I'm talking about, and compare that to the ICO papers, the white papers that come out, which are garbage. Okay, that's number one. Go and pair the two. Go and get a initial public offering for shares. Go and get a public offering for bonds. Get the prospectus. Go and get the prospectus for property and compare it to the white papers. And the white papers are garbage. And as I said before, they're not audited. And you run the risk of losing your money one out of two times. So that's a reason why, legislation has to come in. Also with legislation, the fund managers, the managers that manage money, The quant people that value cash flows and do it every day of their lives with, real-time interest rates, real-time credit curves, real-time cost of funding, real-time bid-offer spreads, all sorts of things, real-time revenue of the business, real-time prospects of the business, real-time technology of the business, will put a proper valuation on the cryptocurrency by a bona fide investment bank, like a Morgan Stanley or a Goldman Sachs or whatever. So it comes hand in hand. When you have an unregulated market, you don't have the professional technical people in that can give you proper valuations and will buy the cryptocurrency itself. Because it's like in the stock market. If Morgan Stanley comes out and says Google's worth $1,000 and Google is only trading at 600, and they have a proper reason to why Google should be trading higher, every fund manager will take that report, get their analysis, their equity analysis, to do their own report to either confirm that or not, and get them to do a valuation, an in-house valuation. If they come up with the right story, like Morgan Stanley, they will give it a buy, and the fund manager will have a limit to how much they can buy of Google within their fund portfolio. Not only will they have an asset allocation limit to equities, which is the umbrella, but they'll also have a share limit per how many shares they can buy of a certain company, like Ripple. So, for example, in the American market, there are 10,500 shares. In the Australian market, there are 2,500 shares listed on the stock exchange. The asset class is equity. The shares are individual companies. They could be in mining, they could be in banking, they could be in property, they could be whatever. The fund managers will manage it against an index, and they will take active bets against the index, which is a composite of the different industries within the stock market. And the equity analyst will go, the industry, say the banking industry is expensive, the resource area is cheap. Let's make an allocation between banking and resources. The global picture, they would say, right, the asset allocation, equities are cheap, bonds are expensive. So at a global picture, a macro sense, they'll move out of bonds as an asset allocation. The asset allocator will move out of bonds and go, right, the fund is going to go overweight more in equities. And they'll give that dictate or that mandate to the fund manager. So the asset allocation will go, say if it's the asset allocation is between bonds and equities. Say it's 50% bonds and 50% equities, and then they have a meeting once a month at board level and say equities are cheap, bonds are expensive. At board level, which they sign off, there is a decision to get out of bonds and to go into equities. And their brief is they can only go down to 10% bonds, and that's it. So if the equity market is cheap at the macro level, the umbrella level, they will go, right, we are going to reduce our we're going to reduce our bonds from 50% down to 10%, and we're going to go overweight equities 90% at the macro level, the umbrella level. Then they go down to the micro. If we're going to go overweight equities, what areas do we go overweight? We don't put the 90% into resources, all of it, because the index is made up of all the different industries within the equity market. And we don't go and buy 10,500 shares, which make up the US stock market, or 2,500 shares in the Australian market, because some are bigger and some are smaller, some are micro, some are very tiny, and they don't have any liquidity and they're crap. You know, some are penny stocks, as you call it in America. So what will happen once the allocation is made between bonds and equity, which is the asset class, there will be a drill down effect, and the decision will be made of the 90% of equities, how will we drill down? So a decision will be made also on how do we drill down into the different categories or sectors of equities. And valuations will be made. Economists will come in and there'll be projections made about the future of where these different sectors will go, depending on, economic growth, depending on consumption, depending on all sorts of things, tax, depending on trade, whatever. So, at the micro level, a decision might be made, banking is very cheap. Banking is a sector. Resources are expensive. Retail, they were expecting retail to do well. They still like telecoms because they believe there'll be mergers and acquisitions, but they hate, gas stocks. So what they'll then do is take active bets against the index, which includes all those different sectors that I've told you, and they'll then go, right, we're going to go overweight banking stocks to the index, we're going to go underweight gas stocks to the index, we're going to go overweight telcos to the index, and we're going to go underweight resources to the index. And then when the fund manager that's managing the fund gets this mandate from the board, the fund manager at the trade desk level with their analysis will buy the best stock in that sector or sell the worst stock in that sector to abide by the board decision about how to manage and set up the fund. I mean, there's a lot more that goes into it than that, but that's a general. So this is what the professional market does, and they will make proper valuations on economic assessments on a cryptocurrency. It's not like the stupid retail market that we see at the moment where things get pumped up and pumped down. Now, people have asked me the question, securities, is it a bad thing or is it not? I don't know why the people in the retail crypto market, which is what we've got, are saying if these things get listed as securities, it's going to be a bad thing. It's a pretty stupid thing to say, because if you say the cryptocurrency market, they are securities, the cryptocurrencies are trade on the secondary market, then and you have legislation, then it is going to open the door for institutional fund managers to come in. Even if we look at one fund manager that's is really, really well known, someone like Fidelity, for example, looking at their stats figure after the end of December 2017, they have about 9.4 trillion, not billion, trillion under management, which, 9.4 trillion. Now, if those guys decide, right, of the asset classes, we're going to go 40% equities, 40% bonds, 10% property, 5% cash, and 5% cryptocurrency, 9.3 trillion by 5%, I don't have a calculator, but you can work it out, is a huge, huge amount of money if they decide to put that in cryptocurrency. Now, what the fund manager would do, and that's done at an asset allocation level, again, with that, they would get their analysis to do valuations and understand the technology properly and go through all the process of making sure that the crypto is supposed to do what it does. And they would test all the IT and test the wallets and everything. Once they're totally satisfied, they'd do a valuation, and then they'd have sectors. Go down to the next level of sectors. Do we invest in platforms? Do we invest in, settlement stocks? Do we invest in, settlement cryptos? Do we invest in artificial intelligence, that sort of thing. And again, one criteria, a big one for international or global fund managers is liquidity. They will not invest in anything that is not liquid. So number one, Ripple is liquid. Number two, we know the technology works. And number three, if the fund managers come into that market, you can see what's going to happen. The price will not stay low for very long. Now, someone like Fidelity, again, as I said, that's got 9.3 or 9.4 trillion, even 5% investing in the overall crypto market would change the market valuation of crypto from 440 billion or 450 billion to tenfold, times 2. It would be massive. So my opinion is basically with the wholesale fund managers in the wholesale market coming into this crypto market due to legislation, this market will do extremely well. That is my opinion, my learned opinion. Anyway, guys, I hope you get something out of this. Please, please be kind to each other and to be kind to me, because honestly, this world is a tough place. And what's wrong with being nice to people? Honestly, I try to be nice to everyone, all the time. And please just make it a better world. It is tough for everyone. We may not be around. We're all blood and water, and we could die at any second. We should treat people with respect and value every person. Thank you. I hope you get something out of this, and I'll talk to you soon.